Welcome everybody to the next episode. So in this video we're going to be talking about multi-time frame analysis. So what is multi-time frame analysis? Multi-time frame analysis, is what we use to be able to mark up the charts, from a higher time frame down to a lower time frame. Now that could be any higher time frame, from the monthlies, the weekly, the daily, probably down to the 4 hour, and then I would say you have your lower time frames, which would be your 1 hours, your 15 minutes, your 5 minutes, and then obviously you've got your entry time frames, which could be the 5 minute, the 1 minute, if you're getting in on a much lower time frame, or of course you can just get involved on, say, the 15 minute or even the 1 hour if you're going to be a little bit more cautious and a little bit more reserved with your trading. So why do we actually want to use multi-time frame analysis? So multi-time frame analysis is good because what it does is it gives you an idea of what's happening on the larger time frames, and then what it allows us to do is be able to read that higher time frame movements and actually get involved on a lower time frame to give us a better risk to reward and more actual entries, on a day-to-day basis throughout the market. As you may already know, the higher time frames always trump the lower time frames. So whatever's happening on the daily or the 4 hour time frame, is going to rule over what's happening on, say, the 1 minute time frame or the 15 minute time frame. So if the 4 hours in an upwards trend and the 15 minute decides to change to a bearish trend, the point of the multi-time frame analysis is understanding that that 4 hour bullish trend may be the one that actually holds price, and the 15 minute trend may be a shorter term thing. There may be a smaller, shorter term move there to actually get involved in, but overall we want to make sure we're aligned with the higher time frames, or at least our entry time frame. Probably something like the 1 hour time frame is ideal, really, to actually get that balance between the high time frames and the lower time frames, and to pick a time frame which actually holds quite a lot of weight when we're looking for our particular candle structures, and the different types of entry criteria that we actually want before we get involved in a trade. So the best way to use support and resistance with multi-time frame analysis is to find the kind of areas on the higher time frames, the key swing points on probably the daily, and then obviously you can refine that a little bit on the 4 hour, for example, but being able to identify the major swings, the major areas of interest, on these higher time frames, and then obviously drawing these out into the future, using these as your areas of support and your areas of resistance, because by doing that it's going to allow you to make the most of the actual trend of the market, and instead of being too laser focused and too zoomed in on a particular time frame, on a particular lower time frame, instead what you're going to be able to do is realize that now we're actually approaching this much higher time frame level of support, so maybe we're going to actually stop here and reverse, and then it allows us to actually capitalize. So that's the importance of being able to use those higher time frame levels of support and resistance, with the element of multi-time frame analysis. So like I spoke about a minute ago as well, it does obviously help our risk to reward. And why is this? Well, obviously if we're in an area on the 4 hour time frame, for example, that's going to be quite a large area of support or resistance. So if we're able to then get involved in that same area but on a 1 hour time frame or a 15 minute time frame by looking for confirmation, to actually confirm the given direction that we're predicting, then by being on those lower time frames, suddenly you'll be able to predict a smaller area of price, and that will then allow you to get in with a tighter stop loss, because there'll be less room for error, and it will allow you to then get those multiple risk to rewards that we're all looking for. So that's the key sort of reasons why we want to be using the multi-time frame analysis, But of course, we do need trading rules that we can follow across all of these different time frames. Now I am going to be going into the exact specifics behind how you can actually make your own plan and your actual rules that you can follow across all different time frames in a later episode. But right now I'm going to give you an overall run through of the concepts of multi-time frame analysis, and how you can actually go about using it, and the types of things that you want to be looking for. So I'm just going to start by drawing up a chart, on here. Now I'm going to act as if first of all we're on the daily time frame. So if I was going to mark up the daily time frame, let's say for example price is pushing up, Okay, we're doing something like this. Okay, and then we've got something like this going on. Okay, now if this is our daily time frame, okay, what we want to be able to do is identify any particular areas of interest, okay, any major swing points, anywhere where, you know, we think price may be continuing based on the daily bias, okay, and also identifying areas of potential support and resistance that may actually hold price and then move it in a given direction. So for example, okay, if I was going to mark up this chart, okay, I'm identifying areas such as this high in here. Now, why is this high good? Okay, because it shows an area of price, okay, where there was a clear rejection. So we know that this area in here is likely to become an area of resistance. So what we can do is we can draw in our area of resistance, okay, and then if price is then moving up here, okay, we're pushing up. If we then reach this area of higher time frame resistance, we know that we can then look to get involved in trades in this area, okay, instead of continuing to try and buy it higher, because we understand the higher time frame narrative and the fact that this is a very strong area of high time frame resistance. So that will then allow us to get involved in potential shorts in this area in here. Okay, now it's not always going to work. Okay, you may get an area such as this where you think, well, we may get some kind of reaction to this area of support, for example. Okay, and on a lower time frame we may be coming down, okay, and then we may come into this area. Now the good thing about having a multi-time frame analysis is exactly that. Okay, you have to have a multi-time frame analysis, so you have to actually analyze the charts on all the different time frames. So not only am I saying, okay, well, this is a level of support on the daily time frame, but instead I'm also going to be looking for those confirmations on the 1 hour time frame, for example, okay, and I'm going to be waiting for price to actually give me, okay, a potential entry on that time frame. Now, how else could we actually get involved in this area, okay? Because I don't want to just buy it. We could also look for one of our candlestick structures. You know, now we've been taught continuation candlestick structures and we've been taught reversal candlestick structures. So say, for example, we're coming in, okay, we're pushing down, and then say, for example, we start some kind of descending price action. Okay, we know all about descending channels and how they're a sign of reversal. So if we then see this kind of descending channel into our higher time frame area of support, this is a great indication, okay, that price may actually be moving to the upside. And then that again will allow us to then get involved on a lower time frame, because we're now building the confluence that price is actually looking to reverse because of the different time frames that are all starting to align with the same idea of a bullish move. So that's the real kind of key concept as to why we actually want to have, you know, these higher time frame to lower time frame analysis, is just because, you know, we want to be able to stack those complemences together. We want to make sure we're in the right direction, okay, across all the time frames. So of course, you know, once we know, okay, for example, the trend on the higher time frame, okay, we could say, well, we're in a clear now bearish trend. So again, on an even higher time frame, we then may come into some much larger area of support from over on the left hand side, okay, and the same concept would apply. We'll then say, well, now we're coming into a 3-month area of support, and the daily is showing me clear signs to the bearish side, so we're able to then trade this area out. It's all the same thing, okay, so because the market's a fractal, what it allows us to do, okay, is trade all these concepts on all the different time frames. So apart from being able to identify, okay, these areas of support and resistance, okay, that's pretty much all you're going to want to be able to do on the daily time frame. Now, the 4-hour time frame is going to be used for more of the same, I would say. Okay, on the 4-hour time frame, these kind of swing points in the market are going to become a lot clearer. Okay, sometimes by going down a time frame or a couple of time frames, what it does is it will just clear up the chart a little bit. Okay, you'll get a few more candles in a leg, and you'll be able to see probably the swings a little bit clearer. Okay, so that might be able to give you a slightly better area for support and resistance. Okay, or there may be, you know, a slightly better, you know, swing point in total for our, you know, our support and resistance to actually be used, which we might not have been able to see on the daily time frame, for example. So that's the best way of using the 4-hour. Okay, and then what you want to do is you want to try and find some kind of time frame that you want to follow price on. Okay, and now I'm talking on every kind of move up and down. So for example, on the 1-hour time frame, that could be a great time frame to use to be able to actually say, okay, well, if we're trending in a particular direction, I want to make sure I can get involved in as many moves as I can. So obviously if price is moving to the downside, for example, price could be, pushing down, pulling up, pushing down, pulling up, pushing down, pulling up, pushing down, pulling up. Okay, because that's what it does. It pulls up and it goes lower and higher, lower and higher. Okay, eventually it will change direction. But what we want to be able to do, okay, is we want to be able to actually trade this kind of price action. So how can we actually get involved in price action like this? Well, of course, we already know about our break and retest. So if we decide that the 1 hour time frame is the time frame that we want to use to trade with, what we can then do, okay, is identify these 1 hour areas of potential break and retest, okay, and then what we can do with that, okay, is actually find potential areas to get involved in trades. Now, of course, it's not always going to happen, okay, and you're not always going to get trades, but sometimes you will. Like areas such as this and areas such as this. So that will be another way for you to actually be able to trade one of these kind of higher time frame legs. So once we know, okay, well, we've got this area of interest here, so this area of support is important. But how do we get there? We're starting up here, the 1 hour changes bearish. Okay, we're getting involved, break and retest all the way down. Okay, and then we can then trade our reversal patterns. Okay, then we can trade it back up again. So always waiting for that confirmation in the right areas, okay? But the main point is you want some kind of zone, some kind of area of support and resistance, ideally, okay, before you actually get involved in any kind of trade. So this is why it's important, okay, to have some kind of structural plan when you come to actually trading for yourselves, because you want to actually factor in all these different concepts, okay, to actually put together to make some kind of rules. So yeah, the 1 hour time frame could be a great time frame to do that on. Okay, you could look for your trending market. You could also look for your reversal structures. Okay, we always want to ask ourselves the question, what phase of the market are we in? Are we in a reversal phase? Are we in a continuation structure? Are we in a higher time frame reversal structure? What kind of phase are we in? Are we in an impulse? Are we in a correction? And if we're in either of those, okay, then are we in a continuation phase? Are we in a reversal phase now? Just always asking yourself those questions, and then we can always look back. Okay, once you know what phase you're in, ask yourselves, okay, well, what kind of structures am I seeing? Am I seeing continuation structures? Okay, now what kind of continuation structures did we have? Remember, we had things such as, prices pushing down. Okay, we then get some kind of, double top in here. Okay, and then price moves to the downside. This is a clear continuation to the downside. Okay, patterns like that. Okay, patterns like things like this, okay, the expanding, okay, there's lots of different things that we can actually look for to be able to actually use to identify what phase of the market we're actually in, okay, and then look for trades in that particular phase. And of course we also have reversal phases. So for example, if price was to push down, okay, say it was doing something like this, and then we started to see this, okay, what's that showing us? Well, now we can actually see that price is starting to descend, okay, in this area in here. We've come from an impulse, and now we're turning an impulse into reversal. Okay, so again, if we saw this kind of structure, okay, and we also had some kind of low point over here, say for example, something like this, okay, we put the low on, okay, and we're seeing that price is sweeping under here into this kind of structure. Now, all of a sudden, we've got a great trade idea, okay? Now, this could be in an area of support as well. But say it's not, say it's in the middle of nowhere, say this is just floating. We can still wait for confirmation, okay, breaking out, retest, and then we can trade this, okay, and we can trade that higher. So it's always about asking ourselves the right kind of questions, okay, of, what phase of the market we're in, what kind of candlestick structures am I seeing, where am I seeing these candlestick structures, have I got an interesting area, or a point of interest, an area of support or resistance to actually get involved in a trade, okay, and then how am I going to get involved in that trade? So then it comes down to our candlestick patterns, and actual types of entry.
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
So that's pretty much how you would go about, trading a multi-time frame analysis, because obviously it takes multiple different time frames to be able to frame up, okay, well, this is a daily swing point, this is a 1 hour structure, okay, this is a 1 hour break of structure, this is a 15-minute morning star, okay, it gives you all the different time frames there, and they're all aligning with different elements of the confirmation, okay, to give you that overall idea and ability to trade. So let's take this to the actual charts now, okay, and we'll look over a few different examples of some of these concepts and the way in which all the different time frames can align together to give us some really nice moves in the market. So let's get straight on into that now. Okay, so the first example I want to show you guys is pretty much just talking through all the different time frames, okay, going from the daily to the 4 hour down to the 1 hour, okay, and having a little look through price at the types of patterns and areas of support and resistance that we're actually seeing on the charts, okay, and the ways in which that they can all be used together to give you some kind of trade idea. So on the chart, I've got first of all the daily time frame. So what would I be looking at, okay, if I was to look at the daily time frame just in general? So of course, first thing I want to look at is the general kind of trend of the market, okay, which way are we moving? Are we bullish? Are we bearish? Are we sideways? Okay, and what's actually happening? So the first thing I can see, okay, is that price started, okay, it was clearly bullish here. It was pushing up, okay, it was creating higher highs, higher lows, higher highs, higher lows, all the way up, okay? Then what happened? We then had this break of structure just in here. We had this break of structure down, okay, price started to move kind of corrective to the downside, okay, it made some kind of descending channel just in here, okay, and then you could say that we kind of had this break back to the upside. We then, okay, tried to break out of the highs and we had this clear double top just in here, okay, and you can see that we actually held these areas of resistance. Now, since we held these areas of resistance, all we've really been doing, okay, is you could say that we potentially broke in areas such as this, okay, and ever since we've impulsed and then we've started to create some kind of corrective pattern, okay, either some kind of descending channel, okay, which would also then align with this kind of swing low in here, okay, and then that's a matter of what's actually happening now. So if I was looking at this and I saw this double top, okay, straight away I would think that this low is probably weak, okay, because price failed to push higher, so I would probably be expecting price to actually run this low, okay, and then I would be thinking, okay, well, if price is going to run this low, are we going to have some kind of descending corrective nature into that low? So that's when this idea of, you know, these three touches in here, okay, this becomes a slightly better idea because, okay, you suddenly got, I mean, either use that high or you just use something like this, okay, and it gives you this kind of longer term descending channel like this. Okay, so that might be the longer term plan, that we're actually going to end up sweeping this low, we're going to end up continuing to correct and descend, okay, and then we'll then see another move back to the upside. So apart from that, I would say that's all that's really happening right now, okay. I'd say that we're probably going to end up moving back and forwards in here, okay, and then we may push up again before, we may push up, we may come back and test these levels of resistance, okay, but overall I think we're probably going to then end up taking out this low just in here. So now I understand, okay, what's actually happening on a daily perspective. Okay, what I can then do is I can go down to the 4 hour, just tidy up any of those areas. So for example, this area in here, okay, this could be seen as a potential area of support, but however, I don't really want to just, use this whole area such as this, okay, because then you end up with a massive zone. So, I could potentially use this wick in here and say this is my area of support. But what I'll do is I'll just go down to the 4 hour time frame because, as you'll see, I'll be able to see this area much clearer, and then it will give me, a better understanding of what's actually going on. So let's go down to the 4 hour now. So there we go. So now on the 4 hour time frame, okay, I'm seeing this kind of thing in here. So this is now a much, better area. And you can see that we then actually held that just in here, okay, and that would have been a nice area to let's get involved in long positions. So again, on the 4 hour, we know we're tidying up the charts. If we then have a little more zoomed in look at where we're actually at in price now, what can I see? So, okay, if I was looking at this, what am I looking at? I'm looking at price was bearish, it was bearish, okay, we broke these levels in here, and then we then sort of rolled over, we came through this level in here, okay, we had a little retest. Oh no, we haven't actually had a retest of this just yet, okay, we actually consolidated before we then broke down. Okay, and now I'd be looking at this area in here, okay, and I'd be saying to myself, well, maybe we're going to get another reaction from this area of support now, okay, because it's moved from this area of support, maybe it's going to go to this area of support. So I would have this in, okay, as a higher time frame area of support, and I'd be thinking to myself, okay, maybe we're going to get a trade in here, but of course I'm not trading the 4 hour time frame. What am I doing? I'm trading the 1 hour time frame. So I'm going to now go down to the 1 hour time frame and look at the 1 hour in a little bit more detail, and this is where I start to actually look for potential, reversal signals or continuation signals, or whatever it is that's happening, okay? So let's have a little look at that now. Okay, so now I'm on the 1 hour time frame. Okay, we've got our higher time frame area of support in. So now I just want to identify what's actually happening on the 1 hour time frame. So as you can see, the 1 hour time frame, it started this kind of bearish move to the downside. We did obviously have this kind of push up in here, but you could see that we did break that level just in here. Okay, we then continued to push down, okay, before kind of pushing up and testing into these kind of areas of support turn resistance. Okay, we then break lower, we come back up, okay, we test these kind of areas of support, of these kind of areas of resistance just in here. We then break down, okay, and again, we're kind of testing these areas. So there is a slight bearish trend in here, okay. We've also now broken this area as well. So, maybe we are going to come down into this area of higher time frame support. So if I was going to look at this, okay, what would I actually be looking to trade? So like always, you need to ask yourself questions when you're actually looking to mark up the chart. So what I want to be able to do, okay, is have one trade idea for a potential continuation, okay, and I want to have one trade idea for a potential reversal. So if I was going to look at the market, okay, and identify where would I want to get involved in a continuation, where would I be looking? Well, we know how continuations work, okay, and we know the kind of structures that we need to actually trade them. To trade them, what do we need? Okay, we need an impulse and then a correction, then we need another impulse. Once you get another impulse, okay, how can we actually trade that other impulse? Well, we've got a number of different options. Okay, what we could do is, again, we could look for the break and the retest. So what could we do? We could wait for price to return, okay, and then trade it potentially out of some kind of area of break and retest in here, for example. Okay, we may see some kind of tap in and some kind of move lower. Okay, so that'll be one way that we can get involved in a continuation. Now, what else could we do? Okay, we may push down and then we may develop some kind of, longer correction, and it may develop into some kind of double top. Well, then we can then look to get involved, okay, in a slightly different way, because we are going to be able to we're going to actually be dealing with a slightly different structure. So it's all about looking at what kind of structures we've got and the best zones to be able to trade, okay? And you always really want to pair it up with some kind of support and resistance. And the best way to pair out with some kind of support and resistance, okay, is by trading either the reversal or the break and the retest. So let's have a look at what actually happens next. Okay, so price continues to push down. So I've still got this area, okay, where I'd look for a potential trade to the downside. Now, of course, I don't like to just trade out of these areas. I obviously want to have some kind of additional confluence. So this is where the kind of candlestick structures are actually going to come into play, because we'll be able to look at, okay, well, what phase of the market are we in? Well, if this is the impulse, then we're expecting some kind of continuation. And if we're expecting some kind of continuation, we can expect some kind of potential, okay, either candlestick structure, maybe on the 1 hour, or we're going to get some kind of lower time frame confirmation in these actual 1 hour zones. Okay, if not, what we're going to do, we're going to end up with some kind of trade idea out of here. Now, how do we want to trade these kind of larger areas of support? Well, it's exactly the same thing, okay? You need to identify, first of all, what phase of the market are we in? Well, we're impulsing, okay? We're impulsing into this area. So for the market to stop, okay, we know that it moves in impulses and corrections. So the only way that we're going to actually see price reverse, okay, is if we see some kind of reversal candlestick structure. So of course, what are our reversal candlestick structures? Well, we could have some kind of descending channel, for example, okay? We could get some kind of lovely descending channel like this, okay? And then we could get a potential trade out of this higher time frame support. What else could we have? Okay, price could come down and we may see some kind of reaction, okay? We could then come down, see some kind of reaction, okay? And it will create a clear double bottom, okay? And that again will give us an indication that price is moving to the upside. So this is the different ways in which you can actually test the reactions of the higher time frame levels of support or resistance, okay, by waiting for those different time frames, okay, and it gives you more confirmation to actually get involved when the chart's actually telling you it's ready to get involved, okay. You always got to wait for the breadcrumbs in price, okay, wait for price to tell you what it wants to do and then react to that. So if we keep playing price out, okay, what actually happens? So first of all, okay, we don't really do anything. We come in, okay, we're pretty corrective right now. We have had this low test candle in here, okay, and then price has tried to kind of consolidate, okay. Price then pushes up a little, okay, and we now have this kind of swing point in here, okay, and price is kind of pushed away. It's very corrective, okay, and we just want to see what happens next. So price comes down, okay, it's broken this low. So right now I wouldn't really say there's a 3-touch channel, but I would say at the moment we're mainly focusing on this double bottom pattern. So what we've had is we've had an element of a push down, a wick away, okay, we've had a consolidation, and now we've had another potential wick away. Okay, so if we see a bit more confirmation now, what we could then do is look to get involved in a different time frame. So what happens next? Price pushes up, okay, we get a nice engulfing up candle. Okay, we then get this wick back down. So at this point in time, okay, I've now confirmed that we've got my double bottom, okay, so my reversal pattern's in. We're in a higher time frame area of support, okay, and it makes sense in terms of what phase of the market we're in. So now I actually want to get involved in the market. So if I was going to actually get involved in the market here, how would I do that? Well, obviously this is where you're going to have to come up with your own kind of plan, your own kind of way, using everything that we're going to learn, okay, as a whole to build your own style of trading. But there's obviously so many different options, you know. You could use this time frame that we're on right now, and we could look for a candlestick pattern, okay? We've had a clear engulfing bullish candle, so that could be your signal. Okay, there's loads of different options. You could wait only for morning stars. Okay, you could go down to the 15-minute, okay, and then look for some kind of break and retest. So if we were going to do that, okay, now we're going to add another time frame in. So now we've also got the 15-minute time frame. So on the 15-minute time frame, okay, we've got this clear double bottom in, okay, which is great. Clear double bottom, okay, and then you can see that we were trending down in here. Okay, so this is what I mean, okay, when we're trending down on the 15-minute, that doesn't mean the 15-minute structure is the correct structure, because actually we're in a much higher time frame area of interest, and that's why it's so important. So instead, what we were able to do was identify that, okay, well, we've got a clear double bottom in here, and we're seeing this kind of rejection. Okay, so now we've had a breakout of here. Okay, so now we can treat this like the 1 hour time frame and look for our potential areas of break and retest. Have we had a clear impulsive move after the break? Yes, we have. Is there a clear area of resistance turns support? Yes, there is. Okay, this candle in here can be seen as the potential resistance, which is broken through, okay, and can become the support. So now we've got this in as well. I would look to get involved in a trade here. Okay, I'd put my stop under here. Okay, just say like 15 pips for argument's sake. Okay, and we would look to get involved in a trade here. And where would we be targeting? I would be targeting, okay, something up here, maybe this high, for example, okay, for 5.86%, okay, on this trade. So there we go, price comes in, and what do we get? A beautiful, okay, low test candle. So we get a really nice low test candle in here, okay, which, you know, gives us even more confirmation. So again, if you weren't looking to just risk entry in here, you could have again waited for another candlestick confirmation. And there it is. So now we get this candle, and we're already in the trade. So now we just want to see if price impulses to the upside, okay, and then that will then complete our trade idea. So there we go, we get an initial push away. Okay, an initial push away, price then comes in again to test more areas in here. Okay, what does price do next? It's quite corrective, okay, we've got this clear kind of ascending nature to it. So, you know, you may look to maybe reduce your risk at this point, or move your risk to half, something like that. Okay, and then we go, okay, we get the next impulsive move to the upside. And then, yeah, we go, we complete the move, and we actually do take this high out. So, there you go, guys. That is a clear way that you can get involved all the way from a 4-hour idea. Okay, we've then turned that into a 1-hour reversal pattern, and we've then turned it into a 15-minute break and retest, giving us a nice risk to reward trade, okay, and a clear 5.86%, okay, on our account. So that's a perfect example, okay, of how this can actually play out when you have all the different time frames in check, okay, and how you actually can build that story based on all the different time frames, waiting for them all to align and give you that indication that a reversal is imminent, and then you can, you know, execute on that position with a nice stop size, okay, and it can give you a great return on investment. So let's look at one more example now, okay, of a slightly different situation, okay, and I'm going to explain to you how, again, you can use a multi-time frame analysis and an element of candlestick structures, okay, to actually frame up a potential trade idea. So let's get straight into that now. Okay, so again, starting on the daily time frame, okay, we've already got this, much higher time frame area of resistance in, and we've got this low in, and we understand that price may potentially be moving to the downside. Now, if price is going to move to the downside, that means that we're going to probably put in more, lower lows and lower highs, okay, as we come down and potentially reach this area in here. So nothing else is really, pointing out to me at this point in time on the daily time frame. So I'm going to just go down to the 4-hour time frame, okay, and just sharpen up some of these areas. So if we were at this point in time, okay, what I would actually be doing is I would have had this area in initially, okay, which we spoke about earlier, and price, as you can see now, isn't actually quite at that level. So this would obviously be an interesting area of mine, and again, I would be waiting for price to push down and then potentially maybe see some kind of pattern in here to trade this away. So as well as that, okay, what else can we actually see right now? Well, we've got a few more things, okay. First of all, we've got this area just in here. Okay, so we want to be aware that this could create, okay, some kind of reversal pattern. So it's important to have this area in. And of course, you can see that we did have this area in here in. Okay, and of course, if we do break, a clear area of support and resistance on a higher time frame, we can still use our higher time frame analysis, okay, and we can treat every time frame exactly the same. So just because we're taking break and retests on the 1-hour time frame, for example, doesn't mean we can't do that on the 4-hour, for example. Okay, especially if it's a clear little down candle like this, okay, it gives us a great indication that price may be returning, okay, to some kind of area such as this, and then we may see a potential reaction lower. And remember, this is a higher time frame, so a smaller move, okay, is still going to be worth a lot of pips to us, okay, especially if we're getting involved on the 1-hour or even the 15-minute time frame. So now we've got these kind of contradicting zones in here. Let's go down to the 1-hour time frame, okay, and try and make sense of it all. So what are we actually looking at here, okay? Well, first of all, okay, we could clear up this 4-hour zone, okay, and we could even refine it to maybe a 1-hour area, okay? We could be a little bit more specific and say, okay, I think price is actually going to come down to this kind of extreme level in here. You can see that we're clearly very impulsive right now, okay, and we've impulsed very strongly straight into that larger area, so there was no real indication that price was looking to react yet. I mean, of course, what could happen, okay, is that price could actually give some kind of, okay, we could have this larger area in, and then what could happen is price may come down, we get a double bottom, and then we get a trade idea, okay. But right now, the way we've just impulsed to the downside like this, okay, it's a very, very strong impulse, okay, and it's highly likely that we may get some kind of reaction to this area just in here. So, like I said, I'm going to keep this refined down to here, and I'm just going to pay attention to this potential area, okay, which we could use to maybe get in some kind of continuation trade, okay, after the correction. So, of course, after the impulsive phase, what do we want? Okay, we want some kind of corrective phase. So, what kind of corrective patterns can we have? Well, we could have a few different options, okay? We could have some kind of push up, push down, push up, okay, reaction, creating a double top inside our area of break and retest, okay, and then that could give us a potential trade maybe down to this area. Okay, well, what else could we have? We could have some kind of channel, okay, so we could have something like this, a 3-touch ascending channel, impulse, correction, impulse. Okay, we could have this, we could get involved in a trade here. Okay, or we could have one or the other, an expanding patterns or our symmetrical triangle. There's lots of different options, okay, but the key is you ideally want to try and tie in with an area of support and resistance so you can stack those confluences together across the different time frames. So obviously we've got a 4-hour area of support and resistance. We want a 1-hour continuation candlestick pattern, and then we want a 15-minute entry. So yeah, let's see if we actually get that, or if we're going to just impulse and we move a lot higher. Okay, so price begins to move quite correctively. Okay, and at this point in time, okay, what can we do? Well, what isn't it? So first of all, it's not a double top, so we can rule out the double top. What other patterns do we have? Okay, well, we have ascending channels. Does this look like an ascending channel? At the moment, yes, it does. Okay, I can clearly connect all of these bottom points very clearly. Okay, and then of course with the top, you can join Okay, this high in here, okay, and you can see that we've got something like this going on. So you can see that there's a clear kind of ascending channel now forming, okay, and it's forming right into this area of break and retest. So now what do we want to actually see? Okay, well, we want to see some kind of reaction, and what kind of time frames do we want to use to get involved? Well, the first thing that I actually see is this nice high test candle on the 1 hour time frame. So even though I'm not necessarily looking to get involved on the 1 hour time frame, you could literally just put an entry right here as that high test candle closed at the third touch, okay, stop above the high, okay, and then target here for a nice 2% trade, or you could push down maybe to this kind of area, okay, and look for a nice 4% trade, okay. So that's one idea that you could have. Or what we could do, okay, is wait for a little bit more on the lower time frame, okay, and then try and get involved in potentially the 15-minute, okay, or something along those lines. So let's try and do that now so we get a better risk to reward. So if we go down to the 15-minute, okay, now our channel becomes a little clearer, okay, you can see these points now, beautiful, okay, it touches into the channel, nice high test candle. Now let's watch price, okay, let's see what actually happens. So price, okay, so if I was looking for a break and retest, for example, okay, I'd probably be looking for price to break out of this swing point in here, okay, so I'd want to see price come in here, trade back into here, and then I'd want to trade it away. Now, if I don't want to take that, okay, I want to see some kind of candlestick formation. So I want to see either, you know, an evening star, maybe tweezer tops, okay, or maybe just a couple of high test candles, you know, a doji, a high test, a hanging man, something along those lines, okay, that's going to indicate to me on the 15-minute that price is really ready to come to the downside. So we're still consolidating, we push back up. Okay, now we get a doji candle. So at this point, okay, we look like we're very close to actually getting a evening star here, okay. We've got the up candle, we've got the doji candle, and then we've got this kind of downwards half engulfing candle. It didn't quite reach the low, okay, but it's all about building that picture, building the confluences, okay. We want to stack our confluences across multiple time frames. We've already got a lot of confluence, okay, in this particular area, especially these high test candles, and now we've also got a doji, all in the same area of this third touch. So this area is looking very, very nice now to actually get involved in the market. So again, what you could do is you could just look to get involved here, okay. You could say that you're happy with this kind of almost complete evening star, enter there, stop above the high, okay, and then you could say again, I want to just target this area in here, okay, for a nice 1 to 5 trade. Beautiful. So yeah, let's say for example we got in that, what would happen next? So price starts to push down, okay, we now actually break, okay, my level, which I talked about before, okay, so we've broken this area. So again, if we get a little pull up into here, it'll be another place, okay, to get involved in a trade. Let's say you missed these confirmations, we'll just look for price to change trend. If price changes trend, we know that we can get involved in the break and the retest, so that would be where to get involved. So price comes down, price retests, okay, so if we get a nice downwards candle, and there we go, okay, massive down candle, so either you just jump in, okay, at that area of retest, okay, otherwise you might miss it with a down candle such as that. So lots of options, okay, you've got the third touch, you've had the 1 hour high test, we've had the 15-minute evening star confirmed with the high test candle as well, okay, and then we've also had the breakout, a retest, and then a push to the downside, okay. So now we've got our target for 5%, and there we go, okay, we get there straight away, beautiful move to the downside. So there again, okay, you can see how we've used all these different elements of the different time frames, okay. We've gone from a 4-hour perspective, put it onto a 1 hour perspective of impulse correction impulse, and then we've used our 15-minute to get us that more refined entry, okay, and then we've traded it down to a sensible area of potential support, okay, which we could then look for more trades. And of course, does price hold this area or does it continue? Let's see what happens next. There we go, okay, we start to move away, okay, and that shows us great indication that we wanted to get out of this trade. Yes, there was no confirmation reversal pattern here to trade this long, so instead what did it do? It turned into another impulse correction impulse, okay, and that's how the markets work, okay, and that is how we can get involved on a multi-time frame basis, okay, using all these different confluences stacked together to give us a trade idea. So I hope you guys took something away from this video, okay, feel free to watch this as many times as you want to really understand the concept I'm trying to get across here of how we can use a multi-time frame analysis. And I'll see you guys all in the next episode, so don't miss it, and I'll catch you guys there.
Be a dork.